Here are the crypto top headlines covered in this video. Spot Ethereum ETF approval may be better for Bitcoin, says Michael Saylor. Next, Bitcoin Analyst sees several more weeks before BTC price breaks $70,000. Also, Elizabeth Warren and anti-crypto movement losing their battle, according to former CFTC chairman. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Spot Ethereum ETF approval may be better for Bitcoin, says Michael Saylor. The approval of Spot Ether ETFs brings in another line of defense for Bitcoin, argues MicroStrategy founder Michael Saylor. MicroStrategy founder Michael Saylor has changed his tone on Spot Ether exchange-traded funds, arguing that the recent nod from the United States regulator is only good news for Bitcoin as well. Is this good for Bitcoin or not? Yeah, I think it's good for Bitcoin. In fact, I think it may be better for Bitcoin because I think that we are politically much more powerful, supported by the entire crypto industry, Saylor told Bitcoin podcaster Peter McCormick on the May 25th episode of What Bitcoin Did podcast. They serve as another line of defense for Bitcoin, he said, following the news that the U.S. Securities and Exchange Commission approved 8 Spot Ether ETFs to be listed on their respective exchanges on May 23rd. Saylor reiterated that this will accelerate institutional adoption as previously wary investors will now recognize crypto as a legitimate asset class. Furthermore, Saylor explained they will allocate capital across the various crypto assets, but Bitcoin will still receive the majority of allocated capital as the leader of cryptocurrencies. I think mainstream investors will say, oh, there is another crypto asset class now. Maybe we'll allocate 5% or 10% to the crypto asset class, but Bitcoin will be 60% or 70% of that, he claimed. Saylor acknowledged his opinion has changed on Spot Ether ETFs, given he previously was under the impression that there was a slim chance of SEC approval. 2 weeks before, the world looked like Bitcoin was going to be the only asset securitized and offered as a spot ETF by the Wall Street establishment, and it was going to spread as the one legitimate crypto asset, he explained. On May 3rd, Cointelegraph reported that Saylor predicted that the SEC would classify ETH as a security, followed by BNB, Solana, XRP, and Cardano being viewed in the same way. None of these tokens will ever be wrapped by a spot ETF. None of them will be accepted by Wall Street. None of them will be accepted by mainstream institutional investors as crypto assets, said Saylor. Saylor's change in tone on what Bitcoin did not go unnoticed by the wider crypto community. Changing his tune a bit, Bitcoin commercial litigator Joe Carlosar posted in a May 25th X post, "Is the next step Saylor buying ETH? That's a serious 180," added crypto analyst Ricky Bobby. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin Analyst sees several more weeks before BTC price breaks $70,000. Bitcoin may not yet be done consolidating below new all-time highs, with BTC price rejecting above $70,000. Bitcoin stayed near key BTC price levels into the May 26th weekly close as weekend trading focused on $69,000. BTC price liquidity thickens into weekly close. Data from Cointelegraph Markets Pro and TradingView showed strong performance by BTC to USD, which briefly passed $69,500 before consolidating. Weekend upside, which some market observers predicted, nonetheless remained capped by familiar resistance zones. As price is ranging around $69,000, there's some liquidity building up on both sides. Popular trader Dan Crypto Trades wrote in part of his latest analysis on X. Most notably, 68,300 and 69,800, good levels to watch in the short term going into next week. An accompanying chart showed liquidity concentrations for the BTC to USDT perpetual swaps pair on largest global exchange Binance. Across BTC order books, however, liquidity was increasing around spot price, leading to lower volatility but up in the odds of a liquidity raid later. Continuing, Keith Allen, co-founder of Trading Resource Material Indicators, stressed the importance of flipping $69,000 to support. Bitcoin lost $69,000 again. It's our strongest and most important resistance level on the chart. Part of his latest X post stated, "I'd like to see a weekly close above $69,000 to gain some confidence in a measured move to $73,000. Allen acknowledged that United States markets would be closed on May 27th for the Memorial Day holiday. Bitcoin may consolidate for several more weeks. On the topic of resistance, meanwhile, popular trader and analyst Rect Capital cast the spotlight on ground above $71,000. Updating X subscribers on BTC price action after the April block subsidy halving, he confirmed that the market had exited the danger zone, which tends to accompany such events. Despite this, bulls are not out of the woods yet. Since the Bitcoin post-halving danger zone ended, Bitcoin broke out to $71,500. However, $71,500 is where the range-high resistance of the macro reaccumulation range is, and this is where Bitcoin rejected from, Rect Capital explained. The consolidation continues, and history suggests it will continue for several more weeks between $60,000 and $70,000. Were that to happen, the May monthly close could still close red, falling in line with the previous 3 years per data from monitoring resource CoinGlass. Our next top headline, Elizabeth Warren and anti-crypto movement losing their battle, according to former CFTC chairman. The former chair of the Commodity Futures Trading Commission, or CFTC, reportedly says that Senator Elizabeth Warren and her anti-crypto agenda are losing their battle. In a new interview with Forbes, former CFTC chairman Christopher Giancarlo reveals that he's bullish on the future of digital assets and says that the anti-crypto wing is a shrinking iceberg. According to Giancarlo, the legislative climate in the U.S. is shifting toward crypto assets, as evidenced by both chambers of Congress passing the reversal of SAB 121. SAB 121 is a guidance note from the U.S. Securities and Exchange Commission published in March 2022, which tells entities how to account for and safeguard their digital assets. Last week, the bill overturning the SEC guideline passed the Senate in a 60 to 38 vote. But Giancarlo notes that the White House may veto the bill, a move traditional banks would likely back. I think the passage of SAB 121 reversal says that Elizabeth Warren wing is a shrinking iceberg. Notwithstanding some parts of the banking system that may be resistant to digital asset innovation, forcing them to reserve 100% against their holdings effectively means banks can't be a player in this innovation. I think the rejection of this is there. So the White House may veto this, but I think it puts them in an increasingly untenable position against the tide of history, against the tide of innovation. Moving on to FIT 21, a more recent crypto bill that would give the CFTC regulatory jurisdiction over digital asset commodities, Giancarlo says that it could work since the CFTC has shown it can regulate non-wholesale markets before. The reason why the CFTC is mostly a wholesale regulator is because it oversees futures markets, which, for the most part, have professional traders in them. It doesn't oversee spot markets, where you've got a lot of retail traders. This act would give CFTC market supervision regulation power over spot markets for crypto and not just the derivative markets. Therefore, the CFTC would find itself, to some degree, engaging in retail marketplace supervision. My mind has evolved on this in part because the CFTC already has certain pockets of retail supervision, and it's shown itself to be able to handle them very well. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.